Welcome to Adding Value with Assar, the show where we dive into the stories, strategies, and market insights shaping the world of industrial and logistics real estate. In each episode, we sit down with industry leaders, investors, developers, and tenants to explore their journeys, unpack current market trends, and share takeaways that can help you better understand and navigate the business. You guys can work through this, right? Like you can
screw up all you want. You can screw up all you want. You're doing real well on this to start. So I see things being positive going in.
Well, it means good news for all of us.
I hope so.
Yeah.
If not, you can roll back the tape and yell.
Yeah, that's right.
I would say a common trait and something for young people or new people in the industry to think about for successful brokers is the ability to listen.
Value creation is not just about the numbers and the financial stuff. It's about creating value for our customer.
I remind myself, like, this is the business we got into. The business of what we got into. The prerequisite was that you just don't give up.
We having the Kelsey brothers on next time?
Maybe. Who knows? I'm excited to bring you a look inside the operational mechanics of a warehouse through the lens of Raymond West. Their team is a one-stop shop for warehousing, systems, and equipment, helping clients design, equip, and maintain efficient warehouse operations. They offer a full suite of warehouse solutions from material handling and automation systems to racking and dock equipment. Before clients even lease or build space, Raymond West can help validate whether the facility is big enough and cost-efficient for their operations. Today, we'll dig into how these systems work, the key challenges warehouse operators face, and how owners, developers, and tenants can better align building design with operational reality. Welcome to the show. All right, Nick and Greg, thank you guys for both coming here today.
Not a problem.
It's I remember a couple months ago, you guys came into our Void office and you guys were talking about your services, and I actually I wasn't up in the meeting, and one of our teammates had reached out to me and said, hey, these guys do business with a lot of the local tenants in our market that we're either working with or looking to potentially work with. We should just talk to them and link up with them and see what it is, the service they have to provide. And maybe we could trade notes on how to potentially do business together in the future. And so that we got together for lunch, and I started to realize you guys really do have a very valuable service that you do provide to tenants in the market. So for folks that don't know you guys, can you just, Nick, Greg, provide a little bit of background on yourself, the company Raymond West, and what it is you folks do?
Perfect. Well, I'm Nick Strand, and Raymond is a material handling company. We've been around for over 75 years. Started off with just forklifts, and then it went into more racking, then automation, conveyor, robotics, and we'll get into all that. But truly, we're just there to help our customers be successful and grow their businesses. Mm-hmm. And it's a great industry. It's never going away.
Sure.
It's just adapting over time. I personally have been here for about 15 years now. Sales account manager. Most of the time, I'm now the senior account manager there, and started off with a sales group of about 14, and now we're about 80 strong, covering the entire West Coast.
Entire West Coast. And you personally, Nick, you cover California, Southern California?
I'm more like major national account type stuff. So my base of customers is here in California, but I've got customers all across the country, Georgia, Jersey, doesn't matter what state it is. If my customers have a facility out in that area, I support them in that area.
And Raymond West is a big company, right? I mean,
yes.
Is it a global company or is it a national company?
Well, it's everything is under the umbrella of Toyota. So under Toyota, they have their car divisions. They also have a company called Toyota Material Handling of North America. That company owns 3 different forklift companies, including Toyota Forklift, Raymond Forklift, and another company called BT. Mm-hmm. I don't know the exact timing of it, but about 25 years ago is when Toyota bought Raymond, and we became one of their divisions. And then we started making most of Toyota's forklifts for them, just painting them a different color. And so they're like a sister company the way, Toyota and Lexus are.
Got it.
Yeah.
And the services you guys provide, can you just kind of walk through that for us? You guys pretty much do everything soup to nuts, right?
Yep. Anything within the 4 walls of a warehouse outside of production. So we've got forklifts, new and used sales, maintenance of those forklifts, rentals. We have one of the biggest forklift rental fleets in the country. Mm-hmm. We also get into racking and other storage media like shelving and stuff like that. And And then we also get into the automation and conveyor of it all.
Mhm.
And recently, as the times have changed, robotics have become a big part of our wheelhouse of tools to be able to supply our customers as well.
And you've been with the company since you said 2010.
2010, that's correct.
And when you started in 2010, did you see that? I mean, were all of those services for the most part provided? Or did you guys kind of start building a customer base and maybe offering one service and then it started to parlay into more?
That's exactly what happened. So we started off with just forklifts and racking. That's when I was there. That's when I first started. That's all it was.
Mm-hmm.
Then we started bringing in dock and door division to help our customers with that. And we partner with other manufacturers, and we become an official dealer and representative of their product. And then automation and conveyor started becoming bigger and bigger. And our president decided he wanted to start doing that as well. Obviously, we started with the smaller systems, and now we're one of the preferred vendors for Amazon.
Really? That's very impressive.
Yeah, we do like over $100 million of conveyor with Amazon a year.
Minimum.
DHL, DSV, all these are really well-known names that we do work with all the
They're
time.
all clients of yours.
Yeah.
And so how are these relationships typically sourced? I mean, you guys obviously have a sales team, but I mean, is it, just old school salesmanship, door knocking, taking meetings, or like how are these relationships coming to fruition?
Well, it used to be that way. When I first started, all I did was cold call, knock on doors, try to get my foot in the door,
Mhm.
and develop the relationships and everything. And then we started bringing in guys like Greg over here who actually go out and market to the bigger companies that could potentially bring us lots of customers, like the real estate and construction and stuff like that.
And that's solely your focus, right, Greg?
Yeah, I'm truly on the business development side. I key in specifically on developers, brokers, and general contractors. So that's kind of my wheelhouse, and that's where I've been for the last 25 years before I came into the material handling industry. So I've been able to kind of take those relationships and kind of grow that out, and just realize there was really a niche within the real estate market where, guys like you and the developers and general contractors are building buildings to provide a lot of density, and there wasn't a lot of education there. So I like to come in, add a lot of value add services, and just be there as a resource early on to put budgeting together. And once it's time and a deal gets done and a lease is done, when it's time to get into the weeds and get into the granular stuff, that's when I bring guys like Nick in to really get into there, hone into that. So I'm really selling the quality of our guys that we have, turning it over to the end users.
Plus, Raymond we're the biggest at what we do. Combined with Toyota, we are I think about a $24 billion company, and the next competitor of ours is about half that.
Wow.
So Raymond does have a big name out there. It's not a household name unless you
work in
the industry. Yeah.
But if you're in the industry, you realize that, Raymond's kind of the Coke of the, electric forklift market. So we have a huge share in that. And on the Raymond West side, we cover 8 states, 24 plus branches, 1,400 employees, and almost $1 billion a year in revenue now.
Mhm.
So, we really cover the gamut.
So you guys, in theory, right, based on kind of what your experience is and based on your expertise, may potentially work with a developer and or an investor as they're trying to put together a design for a warehouse.
Yes, absolutely.
And give them some insight on what tenants are looking to do, trends that are currently happening right now in the market, and where it may be going in the future. And at the same time, obviously, you guys work with logistics tenants and users, not just tenants, but users who are looking to optimize efficiency in their warehouse. Is that fair statement?
That's very
absolutely.
fair.
Yeah. I'll get involved early on with the developers, and especially like the cold storage guys. Of course, here in Southern California, so much of that market is spec development. So I am trying to key in more on the brokers that are trying to put clients into buildings. So as brokers are out there looking at 5 or 10 different properties, as they hone in on their top 3 or 4, we like to really get involved, get into the weeds, do some layout, do some ROM estimations for them so that at least their client has a budget. We typically find that once that lease gets signed, the next thing they're going to sign for is their forklifts and their racking. It carries the biggest dollar amount, and it has the longest lead time. So they really want to make sure that they're making a smart decision after they, procure the right building.
You bring up a good point, the lead time. So like if I'm a tenant in the market, and let's just, you guys know the tenants as far as the different verticals far better. I'm in the furniture side, I'm in logistics, or I'm moving whatever I'm moving in. At what point would you say is the best time to get involved with your group to not only understand what size of a building they're looking for, but location, cost, things of that, and also operational execution of a potential move?
Yeah.
The sooner the better. I mean, honestly, when a customer is thinking about getting an additional building or moving their facility to a different location, that's the time to get a hold of us, because we can help them find the right building for what they're trying to do. Whether they're growing or decreasing in size or whatever the case may be, they may have a theory of what size of a building they need, but due to the height of it, column spacing, just the way it's designed in general, we can get in there and work with them and say, how many pallet positions are you looking to get? And what's the throughput in and out that you're going to have on a daily basis? And let's help design a system and find the right system and right facility to work with that and be able to make you as successful as possible without wasting any money and dealing with any issues. I know one of my customers, they were looking at 2 different buildings, one in Rancho Cucamonga and one in Ontario. And just due to the permitting side of things that I know about, I advised the Rancho building because they were going to have to spend $150,000 of extra money to get the Ontario building ready for their
So you
storage.
guys see through the permitting system process for them as well.
Absolutely.
Yeah,
as far
from
as
start to
getting
finish, one-stop shop.
racking and anything else they may need.
Yeah.
We want to be a partner during that whole process. So we're right there with the end user and then with you guys on the real estate side to really kind of walk hand in hand to make sure that you guys are putting people in the right buildings and to advise accordingly. Not only on, hey, we're moving out a building and we've got all this old equipment. What do we do with it? Do we relocate it? Can we keep it here and work out a deal with the owner? Do we want to bring it with us? We're trying to really maximize that time, or do we want to just, look at staying inside the building and being more efficient? Right now, with the cost of everything being so much, with square footage, with density being so important, relocating is always what we want to try to do if at all possible, get into a better efficient building. But we'll help out with you guys on that side to figure out, hey, does it make sense to renegotiate, stay in the building and be more dense here as well? So those are all the things that we like to try to take into consideration when we're working with the client.
On that topic, obviously some of the trends that we're seeing in the market with the newer buildings is they keep getting higher and higher.
Yes.
Right. And so I've heard from different tenants that the cost of what it may be to suit up a warehouse, if once it becomes north of 32 or 36 or close to 40, may not even be worth the efficiencies that they're able to achieve. What have you guys have seen on that front?
Most of the time, people are paying per square foot for their warehouses. So if we can minimize that square footage and go up and utilize the vertical aspect of the building, I mean, we try to really get that as dense as possible. First thing I do when I look in a warehouse is look up, not to see what they're doing here, but are they maximizing everything up above? And once we're able to figure that out and condense everything down, then that's when the customer gets pretty successful. We've done research, and about 72% of your warehouse costs are labor. So what we try to do is minimize that cost. That's where you're going to get a lot of that ROI and make your money, is reducing your labor. And when you automate and put in conveyors and stuff like that, that stuff runs 24/7 if you want it to. It's not calling in sick. It's not taking vacations. It's not going to sit there and go on Instagram, walk around, talk to their friends. It runs 24/7. So when situations happen, when people call in sick or anything like that, the companies that automate and take advantage of that stuff is really the ones that stay successful.
Do you have to get different type of equipment and racking or different permits once you start to go above a certain height?
The main thing that happens is with the sprinkler systems of buildings, the fire suppression. After about 35 feet, an ESFR system, which is very typical nowadays, that's all it will cover. So if you go above that, then we're having to put in-rack sprinklers and a lot of other stuff that obviously costs money.
Got it.
So if you can keep your storage media from 35 feet and under, that's pretty much the sweet spot without having to dip into the bank account for extra funds.
Sure.
If on that point, just to kind of talk about the clear height and how important it is these days, I might be getting ahead of myself, but the taller we get, I think the better we get now, especially because the bigger the west end of the Inland Empire, there's not a lot of big land available for 500,000, a million square feet. So I'm starting to see a trend of certain developers coming to us saying, hey, Greg, we've got a great cost basis here. We got a great product. However, it's 20 to 25 years old. It's 30-foot clear. And we know that the big guys like the Amazons and the DHLs, they don't want to look at anything less than 40-foot clear. So now we're looking at developers who are taking existing product or looking to take the roof off, raise the roof, and stay within that shell in order to really maximize that clear height. That's how important it is, especially now with California and with the new AB 96, I believe it is, where there's going to be development issues. I think a lot of developers with the next 5 to 10 years are going to be looking at existing product and figuring out a way of how do I maximize the space and keep going up if at all possible.
Do you have any experience on what that looks like on raising the roof?
In terms of actual cost
and timeline?
Don't have a cost impact. However, the density is substantial. I'll give you just a small little case in point, a little case study just recently. DECA was looking to do an 800,000 square foot spec DC in Paris. They had a 3PL tenant come along while the building floor was getting done. The client wanted to get a little case study going to see, hey, can you think about making this a 42-foot clear instead? So DECA came to us. I showed them some elevations, showed them that, hey, if your end user client wants to go with a little bit shorter pallet on the top, we can now add about 18,000 to 20,000 additional pallet positions to that space. And over the cost of 800,000 square feet, it was a major increase right there. So their 3PL tenant was like, please go ahead and build this 2 feet taller. It made that much of a difference.
Wow.
So between things like that or going with more narrow aisles, there's a lot of great things that we can do to really densify the building.
What other trends are you guys seeing in the market right now?
Well, there is a product out there that we support called Movu. And right now, Greg and I are actually working on a project to where our customer, they're putting in a new building. They haven't even broken ground. They're still in the design phase. They came to us and said, with this square footage, can we get 15,000 pallet positions? And there was no way to do that with normal racking and even with normal automation. But we put in this complete lights out facility and we told them, going back to the clear height, they were at 50 feet clear to begin with, and we were able to get them to go, if they went to 55, we did a rack supported building. Basically, we build this system and put walls around it, and it's a freezer application. So now they don't need lights in there. There's just a small door where pallets come in and out, almost like a vending machine, to where they don't have anything in there to maintain or work with, and they're going as tall as possible. And that's like a great trend that's happening right now, is going to these lights out facilities.
And you're seeing that in Southern California.
Oh yeah. They're starting to pop up more and more opportunities almost on a daily basis.
The cold storage market is really leading the way in terms of automation. It's taking a little bit longer here in Southern California because the market's been so 3PL centric for so many years, right? Shorter term leases, 3 to 5 years. Where we're seeing it really start to pencil out as those buildings that a client's coming in and they know that they're going to have to put a box in a box kind of a situation, or do a built to suit kind of cold storage where we're going to be here 10, 15, 20 years. That's where it's going to really start making sense. Like right out of the gate, they need to be talking and thinking about automation to really maximize things. So that's kind of the tipping point's right around 6-7 years, depending on the labor that they're looking to possibly get away from. That's when automation really starts to make sense.
Got it.
Yeah.
And you guys have a pretty diversified group of clients, right?
Yes.
And what are your, let's say, for the purpose of the conversation, kind of narrowing in on the Inland Empire. And I know when we walked in here, you're talking about how busy you are. The Inland Empire, what are the tenants saying out there, or the users saying out there in the market today?
Well, in the Inland Empire, my customer base mainly is like 3PLs. But I also deal with a lot of furniture companies and food companies. A lot of people are moving out there. I know over in Chino, In-N-Out just finally moved from their original location over in Baldwin Park?
Yeah.
From Baldwin Park over, I mean, they had that facility since they started. Their original restaurant was right there as well. And now they're in the Inland Empire. It's just, there's a lot more space. You can do a lot more and customize what you're doing before you get in instead of adapting over time. And I just see a lot of companies moving out to the Inland Empire for that reason.
Yeah, and your logistics companies as well, growing as well. Are they?
Oh yeah. I mean, 3 of the ones I work with, every year it's not if they're getting a new building, it's how many buildings they're getting.
And what do you think is fueling that growth?
That's a great question. I think a lot of people are going more towards 3PLs these days instead of doing their own warehousing and logistics of it all. So as these 3PLs become bigger, their client base is getting bigger because more people are starting to go that route, and they just need more facilities to support all the new business.
Yeah, I've talked to a couple different, or we've worked with a couple different 3PLs, especially 3PLs that source a lot of their business overseas. And my understanding is that based on what they've told us, that their businesses are growing, the factories are growing, and they're putting out so much product that those third-party logistics companies that have started here recently in the last few years, as they've been growing, their growth that they're seeing is exponential because they're kind of, I would say, not pioneering, but small businesses in a moment in time where there's a lot of growth and business to be captured. And so they've been experiencing essentially robust growth. Hence why they've taken so much square footage or done so many deals in the last few years.
Yeah. And I mean, honestly, before they're even done setting up a building, we're already in discussions about the next one.
And are they usually, because there's a runway here, right? There's a lag before you can actually get your racking installed and everything you needed in the warehouse. How are they managing their operation? Are they just floor stacking while you're going through that process with them?
It's a combination of a few things. Sometimes they use competitive 3PLs to store their product. They all know each other. So sometimes they give it to their competitors to hold. Sometimes they're just floor stacking. Sometimes we are able to get in there and temporarily use part of the racking that we install for them while the rest is being built. It's all up to the city and the inspectors to see what they will approve and what they won't approve. The problem is most of the time our customers are coming to us after they get the building.
Yeah.
And then it's like, all right, well, we still have to design it. We still have to quote it. We still have to order it. Permits take a couple of months. And in a perfect world, we would put a design together. They would sign on the dotted line. We would then submit for permits. And then once the permits are approved, then we can start installing. Then once we're done installing, it gets inspected and signed off for the permits. At that point, they can start loading their rack. This is like a 2-3 month process that they're paying a lease at this building, and they have an operation that it's not making any money during that. So it's all about trying to, I don't know, it's like playing Tetris. You're just trying to figure it out as you go along and try to stay operational. And it's really hard because we're still installing and they're operating their shipping and receiving, and we're getting in each other's way.
Yeah.
So the sooner they can get us in the door or include us on the project and put a design together and order the material, hopefully it's arriving, when they get the keys.
Right.
And there's got to be a lot of trust there, though, For
sure. And a lot of these companies are newer companies, right? So this is maybe the first or second time that they're going through the process. There's a learning curve there.
Yes, definitely.
I really think I kind of call it the Amazon effect. I mean, during the whole Amazon build out, they were taking, swaths of space, and a 9-month construction project was not ever fast enough for them. So the GCs got faster, and everyone got expectations just continue to grow. And then through COVID, what kind of started to happen was that space became so much more in a demand that instead of waiting to put dock levelers on spec buildings once they got a tenant signed, the developers were like, heck, we're going to put dock levelers on half these doors. We know we're going to get this lease. We need to start having this building ready. And so it just sped the process up for everybody. So now we're at a point now where we've got all these brand new buildings. They've got TIs, they've got bathrooms, and they got dock levelers. They are ready for a tenant day one. And on top of that, as you know, a lot of these tenants are getting free rent. So they want to be in there operational and be on the plus side as soon as possible. Sure. So again, that's the reason why we try to get involved as early as we can so that we can kind of slow the process down, do it the right way, and make sure that, we're going to have racking and a permit in hand when they want to go live as soon as they get those keys.
Yep.
So
speaking of COVID, we had it was some crazy times during COVID. The business, as I'm sure you guys remember, was on fire. But as the market kind of started to soften a little bit and tenant demand softened, I'd say in 22 and kind of leading up to present day, what have you seen what was that market like for you guys while you guys were working? Has it changed today? I mean, what differences have you seen in the last 3 to 5 years?
Well, I mean, we stayed busy the entire time because a lot of these smaller companies went out of business. Some of the bigger ones, they shut their doors for a little bit. And the ones that stayed operational and everything else, they didn't have enough employees, or there was distancing that didn't allow them to be productive and efficient at what they do. So they were coming to us to try to, keep the flow going, basically. And the funniest part is, me personally, I would talk to my customers about automating and kind of cutting down their labor costs. And they're like, okay, yeah. Sure, I'm sure there's an ROI. And then COVID hit. And all of a sudden, no one wanted to work. Everyone was staying home, and government was paying for all their stuff. They were getting checks just to sit. And these companies are like, oh, shoot, we should have done this automation a while ago.
So have you seen a growing amount of companies starting to implement automation in their buildings?
Yep, because now they see the value in it. It's not until they felt the pain that they finally saw the value in what we were providing them.
And when you say, what is the return on investment? What do those finances look like? Is it like you're buying it and then gradually over the course of 10 years, you start to see the return of an investment, or how does that look like?
Way faster than that.
Okay.
Yeah. Me and Greg are working on a project right now. It's roughly an $8 million automated system, and the ROI is roughly around 3 years.
Mm-hmm.
And I mean, that's a huge investment, but that's a quick ROI for that.
For sure. And what kind of use is the occupant?
It's a freezer
Okay.
application.
Yeah.
Cold storage.
In regards to forklifts and racking, so what are the pros? What are the cons? Anything interesting that users and brokers should know about what types of forklifts people are using today and why they should pick one versus the other? Same thing with racking. I mean, how do you know to go with maybe imported racking or domestic racking? What are the differences there?
Well, starting with racking, I would always stay with domestic. When you get some of this imported racking, it's harder to permit at times. And if it is permittable, the capacities are going to be way lower. It may look the same. It may have the same gauge of material, same size base plates, whatever the case may be. But due to the manufacturer, dictates what it's capable of holding, especially in Southern California, where we are in a high seismic zone. So there's a static capacity to rack, and then there's a seismic capacity. The racking that is here in California, let's just say you can hold, 1,500 pounds per pallet position. You can take that same racking out to like Alabama, and you'd be able to hold almost 3,000. It's it's by location specifically. And we have seismic engineers that before we even go to bid, we put a design together and we send it to them with a specific address and ask them, what can we do here? Like, what do we need to do to hold this these pallets at these weights?
It's essentially the threat of an earthquake.
Yeah.
The threat of an earthquake can determine how much weight these pallets can hold.
Yep. And as the years go on, the rules get more strict. So it's, systems that I designed 10 years ago would not pass today. So keeping up with the codes and everything like that is very, very important.
What do folks usually do? Because I've noticed when guys end up moving from one warehouse to the other, a lot of times they don't take their racks with them. So what happens with the old racks?
Well, we offer them a buyback. The best thing for the customer to do is to sell it to the new tenant, because it's already been permitted. It's already in there. It's installed. It's ready to go. And they can move right in and start operating on day one. They don't have to go through this whole process.
And they don't have to spend money to tear it down either.
But how easily transferable is it, right? If the new tenant is, potentially moving different types of goods or different weighted goods, I mean, is it usually an easy fit?
Just depends on how much data they have supplied. So if we have an idea what those pallet loads were before, if we did the plans, if we have those calculations, if we have a bill of material, that really helps to understand that next client coming in and whether or not it's going to be work for them. And then we may have to do some reverse engineering as well.
Got it.
Yeah. So-
And if they weren't able to sell it, and I'm assuming you guys would come and buy it back from them, and
Correct.
would you guys repurpose it or?
Yeah, we would. We do sell used rack. We only sell the good used rack. I mean, the stuff that's all beat up and stuff, we just scrap that part. But there are a lot of companies, especially the smaller ones, that are these startups that don't have the money. They don't have
Right.
the capital to go in there and buy a brand new racking system. So they'll start with small sections and continue to build on. And but yeah, used rack is still fine.
Sure.
As
Yeah,
long
As long as
it's-
it works. It's a warehouse.
Absolutely.
Yeah.
And you're saving, 25, 30% right now with where the market is. There's quite a bit of good used rack in the market. So it's always an option.
Mhm.
And we like to, be that option as far as providing here's new, here's your lead time, 8 to 10 weeks.
Sure.
Here's used. We can get it in 2 to 3 weeks. How does that sound? Great. It's a
Mhm.
win-win for everybody.
On the topic of the market, have the tariffs impacted your guys' business? And if so, how?
Yeah. Go ahead.
I'll let you
Please.
take this one.
Yeah. on the racking side, obviously it's affected us by about 20 to 25% in cost increase. So that's always a big challenge, right? Especially on the bigger projects. On the forklift side, I'll let you kind of talk about that a little bit.
I mean, it's constantly, the pricing is going up. Raymond really likes to keep their price like no change. I mean, there was times where it went 2-3 years without a price increase. And then all of a sudden with all the tariffs and everything, it's every few months there's a price increase. It's not because we're trying to make more money. In fact, Raymond tries to absorb as much of that as possible before they even pass it through.
Mhm.
But they finally get to a point where their hands are tied and they have to send out that price increase. And, it's tough as a salesman to sit there and tell my customers, hey, that quote I gave you for those forklifts? Yeah, that's no good anymore.
Yeah,
I
right.
gotta up it, a percentage.
I think, to be fair, I think we're seeing it all across everywhere.
Yeah.
It's not just in your guys' industry.
Mm-hmm.
And me personally, even though I don't like it, I understand it.
Mm-hmm. Agree.
In regards to forklifts, anything exciting and new in the last couple of years that you've seen benefit tenants and users?
Lots of stuff. I mean, on the Raymond end, we have a whole line of different styles and shapes and sizes of forklifts that all do different things. And we've gone to automated forklifts. We have a line of unmanned forklifts that can drive around and pull product for you.
Mhm.
I mean, even in our very narrow aisle or V&A, where we're only 6 foot and it's a wire guided forklift, it will do it on its own. It connects to your your warehouse management system, and it'll pull pallets for you. It's pretty cool.
Yeah,
It's
it's
pretty
going to,
fascinating.
I think it's been pretty revolutionary because you've got clients that have fleets of 10, 20, 30, 40 forklifts. They've spent already millions of dollars on those machines. They're still really good. And now we can kind of go in and potentially retrofit those, take the, labor away, and they're going to continue to be able to be kind of semi-automated moving forward.
And it
which is
sounds
pretty
like that's the
great.
direction these warehouses are going.
Yeah,
It's going to be that way more and more. The labor is going to get harder and harder to get to, for sure.
and people are getting lazier.
Yeah.
And like I said, I mean, these automated forklifts don't call in sick.
Yep.
You need someone to maintain it, someone to swap out batteries if need be to keep them running. But these things will run 3 shifts
Mm-hmm.
all day, every day.
Mm-hmm.
Weekends, nights, does not matter.
Have you seen any demand because I get this question sometimes from owners and they're like, what type of value does solar provide to my warehouse? And to be honest, I can't really speak of any case studies that we've worked on that we've sold a warehouse or leased a warehouse and somehow the solar that existed on the roof translated to a benefit in rent, right, for the owner. So, I mean, do you guys work with solar at all, or have you seen anything in that realm?
One of our vendors, they do have a solar division, and anytime a customer doesn't already have it, I kind of just bridge the gap and connect the two. It's kind of more of a value add thing that we have with that company. So I don't dig into solar too much, but we do provide it.
Okay.
Yeah.
Yeah, I haven't seen where it has kind of positively affected the material handling because obviously it depends on who owns the building and who gets the benefit of it.
Sure.
Yeah.
But it does help because these commercial solar companies do have these massive battery banks. We have one at our Cypress facility. And I mean, if there's ever a power outage, we're going to be fine.
Mm-hmm.
And with solar, it's constantly recharging it. instead of going to those expensive generators that can break down and stuff, we've switched to battery power.
I would imagine, heavy power users would benefit from it, right? And we don't, in our market at least, everything is so distribution focused.
Mhm.
My guess is there might be a little bit more of that in other states that focus more on manufacturing.
Well, but any cold storage facility, I mean,
Yep.
they got to keep
Yeah.
those places cold, and that's not a cheap electric bill.
For sure.
So I would definitely recommend anyone that has any sort of refrigeration get solar. And the way like SoCal Edison is with the tiers and the timing of it all, when it gets down to forklifts, we even program the chargers to charge the forklifts at a certain time when energy is the cheapest
Mm-hmm.
for that reason. But solar helps. It
For sure.
definitely does.
In the next 5 years, what do you guys predict what kind of changes may be on the horizon for your guys' industry?
Oh, that's tough, because if you would have asked me that question 5 years ago, I would not have said the way it is today.
Sure.
But robotics is, and I mean, that's the way of the future right now with warehousing, is everyone's getting into robotics, but then also with AI starting up, who knows what's going to happen?
Sure.
I would say for a kind of the mom and pop kind of operation, I see the trend of the aisles are going to start getting more narrow. People are already going to have racking in place, and maybe they weren't really worried about efficiency, and then maybe they can't afford to move out to a nice big new building. So they're going to be looking at getting more dense in their own space. So the nice thing is, how I share with a lot of the real estate people is typically, any building that's 80 to 100,000 square feet, if they look to go to a narrow aisle application, they can, get about 25 to 30% more density in an
Mhm.
existing space. So that's the first thing I'm going to see is aisles are going to get more narrow, which means we're going to be selling a lot more narrow aisle forklifts. And then I think the second thing is on the real estate side, the buildings are just going to keep getting taller. I don't think that's going to slow down. I think the only thing that's going to slow that down is going to be the sprinklers. I can't speak to what they're going to do with the sprinklers beyond like the K25 head. But as land continues to get more pricey and more sensitive, as you're going to be building more of these buildings, it's 40 foot, it's 42. It's going to look at 46 and 48 at some point. It's going to be more rack supported coming up. I think there's going to start to be more built to suit opportunities. And at those opportunities, you're going to see especially much more automation come into play.
Mm-hmm.
Well, a forklift can only go so tall. Once you're going taller, like Greg is saying, how are you going to reach all that?
Mm-hmm.
A normal forklift, I mean, as you go higher, the capacity that it's able to lift
Goes down.
decreases.
Right.
Yeah.
So if you're going 60 feet in the air, what type of forklift? There's only one that
Yeah.
Raymond provides that can do that type of stuff. And
At that cost for that forklift and the lead time, you're almost looking at automation at that point.
exactly.
So
Mm.
So it's not just the system itself, is how you work with that system.
Mhm.
And now with a lot of this automation, you can use the smallest forklift. You can go 60 feet in the air. You put your pallet on this little shuttle thing, and it's going up elevators and going down aisles in any direction, and it's pretty cool. But it keeps their forklift costs down,
For sure.
and that's why at Raymond we've got to be able to pivot, because we start off as a forklift company. I don't know, maybe 20 years we won't even have forklifts.
Mm-hmm.
You never know.
yeah, for sure.
All right, guys. Well, I appreciate you guys coming on. It was a very educational experience for me, and I know you guys provide a valuable service for users out there. And if somebody wanted to reach out to you, and maybe either they're a broker or they're a user who's listening, what would be the best way to come into touch?
Well, I mean, I can be reached through my email address, greg.hanoyan@raymondwest.com. And then, you can find me on LinkedIn as well.
Right.
Yeah.
I'm on LinkedIn, and it's nick.strand@raymondwest.com.
Awesome.
And I just said one last thing is just get us involved sooner. I have no problem going with real estate brokers and whatnot with customers to help them pick out the right building, make sure that they're getting what they need, and that they're not getting something too small, not something too big, the right fit with room for growth.
Yeah, one thing I noticed about you guys the first time we talked is that you guys are very similar to brokers, in the sense that you're open to the idea of adding value or providing value early on in the process.
Yeah.
And building credibility to earn a relationship to potentially work with someone, which I appreciated as well.
Yeah. I mean, all of our consulting is free. All we want to do is be part of the bidding process.
Sure.
Yeah, absolutely. thanks for including us.
Yeah, 100%.
We appreciate it. This was great.
It was great. Have
Awesome.
fun. Thank you guys.
All right.
you.
Thank
Appreciate
you.
it. Thank you for listening to Adding Value with Shai Assar. We'll continue bringing on guests with stories and insights that matter in the world of industrial real estate. If you enjoyed today's episode, please share it with a friend or colleague. And if you're a landlord, tenant, or investor exploring opportunities in the Inland Empire, feel free to reach out to us. We'd be happy to help you navigate the market.